Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny Burt, the mother effing Dividend Diplomats. We can't wait to talk to you today. We are talking about one of our favorite stocks from our region. This consumer staples giant is on the verge of becoming a dividend aristocrat. They've increased that dividend for 23 consecutive years. It's not just why we're talking about them, though. They are showing signs of undervaluation, so we're going to evaluate them, their earnings release, and explain why this may be a stock to buy in today's video.
Man, guys, smash the subscribe button. Give us a nice thumbs up. Thanks for rocking with us. I know you caught our quick pick stock pick Monday video. We talked about it then. Hard to find undervalued dividend stocks, but we keep finding a handful every single week. And here's another one that is down this year. When the S&P is up, they are down 5.5%. Things are looking a little interesting post acquisition of a certain massive consumer brand. And they're also divesting quite a few of their consumer brands in the certain industry that Bert's about to talk about, not to give too much away here.
Oh, it's fun.
So with all the noise, as Bert and I just talked before filming this video, is it causing the stock price to drop? Because it's hard to kind of understand what their business might be going forward. And when that happens, does that provide buying opportunities for us dividend investors?
Yeah, you took the words right out of my mouth because we're potentially in a position to take advantage of the noise when other people are just sitting on the sidelines or selling, waiting to see what on earth is happening. This might be a great time for long-term investors like us who aren't investing for 1-year gains. We're not investing for 2-year gains. We're
Not
investing
3 year
for the
gains,
long.
not 5. We're going in for lifetime gains, baby.
That's right. I mean, because we are buy and hold investors and we are looking to hold this stock and grow our income.
Hodl, baby, hodl.
Yes. All right. So who are we talking about today? If you haven't figured it out already.
Are we talking about TKO? No,
Oh no, that would be fun though. We should do a TKO video. Even
line
though,
it up for this weekend. We'll do it this weekend.
yeah, we'll have some fun. We'll do a TKO video. Instead, we're talking about a company who has a really fun motto. Tastes so great. Has to be Smuckers. So we're talking today about J.M. Smucker. Ticker symbol S
J
J M.
M.
That's right. The peanut butter, the jelly, the coffee, the kind of pet food, the Hostess, all the good stuff that's
Hostess, yeah,
out
the
under the
big
brand
acquisition.
for Smucker. That's exactly what it was. They just finished their
The
acquisition.
Twinkies.
Yeah, Twinkies, Ho-Hos, all the good stuff. It was a weird pivot for a company that did focus on peanut butter, jelly, and a lot of the healthy snacks. They're like, screw it. We want to just dominate all snacks. So they bought Hostess. They want to get more shelf placement in the grocery stores. And it just closed. That was announced in there. So it caused a lot of noise here in their sales numbers.
Caused a lot of noise, guys. Sent the stock price, we're down 5.5% this year. Sales did increase. They're still over 2 billion in the third quarter, guys. Profit margins are at 12%. Operating income was also up 28%. EPS kind of blew consensus though out of the waters, 248 versus 227. They're expecting around 8 to 10% growth, aren't they, in sales?
Yeah, that's what's great about Smuckers is despite the noise, they still continue to deliver the results and deliver the earnings and revenue growth. That's what I think is so funny with them. Yeah, the adjusted earnings from the guidance, which was a piece of this earnings release, earnings are still about to be close to $10 per share. They're between 9.45
Adjusted
and
earnings.
9.65. Yeah, it's
What do you guys think about adjusted earnings, the adjusted earnings, not the real earnings per share? Let us know in those comments below what you think and feel about adjusted EPS.
yeah. I mean, our last video, right, Lanny, it got adjusted views of 1 million. So I mean, it's things
Yeah,
are looking great.
yeah. When you back in all of the views that we didn't have from our video, our video was the best.
Yeah, when you extrapolate the views of the unviewed population, you get close to 1 million views. That's what I picture a lot of these companies are doing when they're calculating all those adjustments. All right.
Two,
So yeah, so all right. So we talked about the sale of the acquisition of Hostess, but they have had two other moves, and that's what people continue. They're taking a lot out of their business to focus on the core of the peanut butter, the jelly, the coffee, and the snack foods. That's where they want to be. They got rid
the
of
Poland blow.
Yeah, that pretty much at this point. Sahali Snacks, the Second Nature brands. I don't know. It was an all cash transaction, 34 million. This unit produced about 48 million in sales the previous year. So this wasn't the largest divestiture. It's nice to get some cash in the door, but cash didn't quite cover 1 year's revenue. So that's the interesting thing from it. The other big one was back in April 2023. They sold a lot. This one was a lot bigger. They sold a lot of their dried pet food business to Post Holding for a $1.2 billion transaction. With it had about 700 million in cash and
Oh, man.
5.39 to of Post. Yeah, so this one was a lot bigger. This unit, the brands they sold off, had 1.5 billion in annual sales. So that was a much larger move getting it out.
Post Holdings, I mean, they've got a lot of different brands now. I mean, they're huge. And I think that it makes sense. I think they're probably, it's funny when you see different consumer brands kind of trade off and on different, portfolios, right? I always find that interesting, to
Yeah.
see if that works or not.
Yeah, I agree because it's like what are you going to unlock with that the other people couldn't? Like that's what I think is always the funniest.
They're like, our grape nuts and our fruity pebbles can now make this on the same conveyor.
Yeah.
It's just
The synergies. That's all about the synergies. So all right. So now that we kind of know what's going on here, some background on Smuckers, let's run them through our screener, which has three metrics: the PE ratio less than the S&P 500, the payout ratio less than 60%, history of increasing dividends, the bonus metric, the dividend yield, and the super bonus metric, the synergies. We're going to talk about the synergies in every one of these videos going forward.
all about the synergies, guys. All right, those are the metrics that we're about to dive into, guys. Let us know, by the way, what peanut jar is in your cupboard? What peanut butter are you guys using? Are you a Jif? Are you a Skippy? Are you a Peter Pan? Or are you an Aldi, Walmart, Target brand?
Aldi brand. We've just been buying Aldi brand. We run through it at this house.
Bert runs through it. Let us know in the comments below what you guys think of your peanut butter. All right, though, Bert, Smuckers back at literally like kind of where they've been for, I feel like the last like 5 years, right under
Yeah.
$123 a share.
Yeah, they haven't moved much. Their price is 122.54. Forward earnings are 9.59 according to analysts. That's a PE ratio of 12.78. So very much a discount compared to the S&P 500.
Yeah, yeah, there's no question there. Paying $4.24 in dividends over the course of the last 12 months and going forward. 44% dividend payout ratio. Safe. I can continue to grow it based on, again, using that adjusted earnings per share.
Yeah, that adjustment, man. 5-year dividend growth rate's 4.75%, and they've increased that dividend for 23 years, as I said in the intro. So they are about to become a dividend aristocrat. Dividend growth has slowed, though. So that is the one thing with Smuckers, but I guess that's to be expected when you're dealing with acquisitions and you're selling off. Now's not the time to start juicing up that dividend until the cash flows start to shake themselves and stabilize.
Yep. Dividend yield now is 3.46%, pairs favorably with a 5-year dividend yield average of 2.76%. So 70 basis points on top, pretty much just call it 25% premium right now on the dividend.
Yeah, so that's Smuckers, everybody. We'll put the chart up here with them. We hold it in my wife's account. Pretty nice position. What am I doing? I'm just watching right now. It's a great stock to shoot up the watch list. Things look great. I'm in a position where, hey, we can be a little bit stubborn with it. I mean, if the yield were to cross 3.75, that would be amazing. Even 3.6 would be awesome. Just drop that price down. That would be fantastic. So what? That would put it around the 110-ish mark, I think, Laney.
Yeah, you need it at 113 or below. 113. 113.
113. That's right. So Laney, what do you think about Smuckers?
I don't know, I think it's a good company, obviously based in Ohio. You got to love the support of the OHIO here, guys. I think they're figuring things out. There might be some room still to go down on Smuckers. I could, I don't think this is when you're racing to go get guys, but keep it on the watch list. See if it drops below 115.
Yeah. All right, everyone. Let us know what you think about Smuckers. If you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, if you're not with us, you're against us, Jack.
That was Bert, the Hurt, and Lanny from the DD over and out.